This is your teacher Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve a question from A2 Accounting, and the topic is basically business purchase. So we are going to solve a question from A2 Accounting, and the topic is going to be business purchase. This question has come in May-June 23-32. May-June 23-32. I can expect such type of question in the coming exam, which is on October-November 25-32. I can expect a question like this. 373 page of my book. So let's see May-June 23-32. What is the question? Alice and Bob had been in partnership for many years, engaging in the trading of wood. They shared profit and losses in the ratio of 3:2. So their profit sharing ratio is 3/5 and 2/5. The total contributed capital was 2,50,000. Each partner contributed capital on the basis of profit sharing ratio. So we can differentiate the profit easily. That is 2,50,000 into 3/5. 1,50,000 is the capital of Alice, and 2,50,000 into 2/5, which is going to be 1 lakh, is going to be the capital of Bob. On 1st January 2023, they agreed to sell the business to X Limited, also a trader of wood, for 4,20,000. So the agreed price between X Limited and Alice and Bob is 4,20,000, which is called agreed value or purchase consideration, 4,20,000. How this purchase consideration is going to be settled, we will be, the examiner will let us know in the question. X Limited took over all the assets except cash and bank and a vehicle. We believe we always have an idea about this, that normally cash or bank will not be taken over by the new company. The assets taken over were revalued as follows. Carrying amount means these are the balance sheet values. Carrying values means book value. Book value means balance sheet value. Premises 124,000, equipment 38,000, vehicle, one of the two vehicles 23,000, inventory 32,000, trade receivables 73,000, and revalued amount means these are the fair values. No, not revaluation. No. This question belongs to business purchase, not partnership changes. So revalued amount is the fair value of the assets, right? So fair value of the assets are going to be 3,52,000, and the trade payables are not given. It means there might not be any trade payable, right? Alice took over the second vehicle, carrying value 25,000 at the value of 23,800. So the second vehicle has been taken over by, the carrying value of that vehicle is 25,000. That has been taken over by the Alice at a price of 23,800. The trade payables of 44,000 were settled after taking a cash discount of 5% and were paid out of the partnership bank account. So it means clearly stated that one of the vehicle and trade payables are not being taken over by the new company. It is supposed to be settled by the partnership business. So we are basically 44,000 were the trade payables, and after 5% discount, the partnership business, Alice and Bob, they are making the payment of those trade payables themselves from the bank account. Cash at bank at 31st December 2022 amounting to 27,000. That is the cash at bank at 31st December for the X Limited, which has X Limited cash at bank is given, and the value of the vehicle is given 25,000, and the cash at bank is 27,000. So we believe that asset minus liabilities, we can find the total capital, including the current account. And then if you subtract total capital, which is given in the question, and you subtract the current account, you will subtract the liabilities from the assets, you will get the current account balance. We'll do that afterwards. Purchase consideration was settled by 2 lakh ordinary share of 1 each at a price of 1.6, and the balance is going to be paid in cash. We believe that the purchase consideration is 4,20,000, which is supposed to be settled by 2 lakh ordinary share of $1 each at a value of 1.6 per share, and the balance in cash. The ordinary shares were issued to Alice and Bob equally. So the ordinary shares are supposed to be divided between Alice and Bob equally. Point number 6, Alice and Bob had a credit balance on their current accounts at 31st December 2022. The balance on Alice account was twice that of Bob's in the current account, and their current account were transferred to their respective capital accounts on 1st January. So we used to transfer the capital accounts to their respective current capital accounts. May-June 23-32. state two reason why a business may acquire another business, right? For synergy, okay, to decrease the competition in the market, to get benefit from the purchase of the other business because his profit now will be taken over by the new company, right? So these are the business to have more economies of scale, to get benefit from economies because they will be able to purchase in bulk, so they can get more discounts, more market share will be acquired. So these are the business. These are the reasons that a business may acquire another business. There are some other reasons also. You can write anything, whatever you suit, but you feel good. Prepare the realization account at 1st January. Remember that the realization account is prepared from the point of view of the selling business, which is partnership business. Same is the case that calculation of purchase consideration will also be made from the point of view of the selling business. But calculation of goodwill and the entry for the issuance of share capital, the share premium, that will be made from the point of view of the purchasing company, which in this case is the name of the company is, that is, what is the name of the company? X Limited. Okay. So X Limited basically has taken over the business. Prepare the relation account, partners capital account at 1st January to close the partnership books of account, right? And prepare the journal entry in the books of X Limited to record the acquisition of the partnership. Narrations are not required. So I was solving the last question, which was completely of the same type. And I have almost I have completed the question, but not fully. So because of my laptop, it was not charged. Now my laptop is fully charged. So with the cash she has received, Alice is considering setting up a new business trading in wood on her own. Advise Alice whether or not she should set up this new business. Justify your answer. So obviously, as to run through sole proprietorship, you can easily go for the disadvantage of sole trader and advantage of a company. So that will make it an advantage of having a shareholder in the company because he's now a shareholder in the company. So you can give the benefits of the company as a shareholder, and you can give the drawbacks of the sole trader because he wanted to start his own business, right? You can go for the disadvantage of the sole trader, that it is more risky, right? And risk will not be divided. So other things can matter. But let's first solve the question, then I will come back to this particular point also. So May 23-22, let's go for the realization account. But before going towards the solution of the realization account, I will go for some calculations, which is the first calculation is for calculation of, calculation of purchase consideration. So let's do that. We used to do this calculation just to make our question a little easier to understand. So calculation of purchase consideration, which includes ordinary shares, which is supposed to be divided between the partners A and B. It is clearly stated that the ordinary shares are supposed to be divided 2 lakh ordinary share of 1 each at a value of 1.6, and they are supposed to be divided, issued to Alice and Bob equally. So what we are going to do, I'm going to find the total value of the 2 lakh multiplied by 1.6. So the total value is going to be 3,20,000. So now 3,20,000 is supposed to be divided between Alice and Bob in the form of shares equally. So that will be 1,60,000 and 1,60,000. Total is going to be 3,20,000. The remaining amount which they supposed to pay is supposed to be paid by bank. So we know the purchase consideration, we know the total amount of purchase consideration, so we can easily get the amount of the bank. The total amount of purchase consideration which is given in the question, which is 4,20,000. So let me write here 4,20,000, and the difference is going to be the bank, which is going to be 1 lakh. So we are making the payment through bank, which is going to be 1 lakh. Now I am going to report the calculation of goodwill. You must be thinking, sir, you should have written share capital separately. You are right. 2 lakh into 1, that will be 2 lakh. And share premium is going to be written separately. But this calculation we used to do from the point of view of the new business, that is 2 lakh into 0.6 that we used to do from the point of view of the X limited. This calculation we will require when we are going to pass the entry for purchase, entry of purchase in the books of X limited. We will go for this calculation. Total amount obviously for the whole share is going to be 3,20,000 because we know that share capital is always written with face value everywhere. So that's why we have to write the share capital separately. Now let's go for the calculation of goodwill. For that, we will start from assets taken over, not at the carrying value, at the revalued amount. That is premises, equipment, and vehicle. Let me write it down. Premises, equipment, vehicle. Let's find the value of these 186,000, 32,000, and 18,000. So I will write here 186,000, 18,000, sorry, 32,000 and 18,000. Then comes other assets which has been taken over, that is inventory 45,000 and trade receivables 71,000. No. Carrying values will not be used because we have to go use the fair value of assets taken over. So inventory 45 and trade receivables 71,000. जिस पे नई कंपनी ने टेक ओवर की है, inventory 45,000 and trade receivable is going to be 71,000. So these are the assets taken over by the new company. I will go for the total of this. G, can you please tell me the total of all this? That is the assets taken over. Liabilities has not been taken over at all. So they will not be a part of that. And I'm going to compare the purchase consideration with this so that I can find the amount of goodwill. Yes, last question, the amount of goodwill was given and we have found the purchase consideration rather. But in this question, the goodwill is not given and purchase consideration, we already know the purchase consideration. So 352,000, I think that amount is already given over here, 352,000. And other trade payables are not being taken over, obviously. Cash at bank is not being taken over, so that will not be a part of the question. So the assets taken over is going to be 3,52,000 and the purchase consideration is 4,20,000. So whatever we are making the payment more than the net assets of the business, that is going to be known as goodwill. So goodwill is going to be how much? That is 68,000. So we are making the payment of 68,000 as a part of goodwill. Now you can pass the entry in the books of new company, books of X Limited. It is given afterwards, but I'm just passing it right now. What entry we are going to pass? Premises is going to be debit, then equipment is going to be debit, then vehicle, again, it's an asset of the new company now. Inventory, it's an asset of the new company now. Trade receivable, it's an asset of the new company, it will be debited. And goodwill, because we have paid, this is the goodwill paid for. It is also the asset of the new company, and I will credit the X Limited with the amount of purchase consideration. So premises is 1,86,000. Equipment we have purchased, that is the asset increase in asset, that is debit, that is 32,000. Vehicle we have purchased, vehicle has become the asset of the X Limited now. Inventory 45,000 and trade receivable 71,000. And we have also acquired goodwill, which is a purchase goodwill, and it is going to be recorded in the books of account with an amount of 68,000. X Limited is going to be credited with 4,20,000. Not X Limited, sorry, Alice and Bob, because we are basically preparing the books of X Limited. Now we have to make the payment to Alice and Bob, whatever is decided between the company and us. So they are supposed to pay 4,20,000. Now they are paying. How they are paying? Let's go for that particular entry also. Alice and Bob is going to be debited. Why, sir? Because our liability is going to decrease by 4,20,000. That entry is supposed to be passed by in the books of X Limited. We are making the payment through share capital The share capital is going to be credited with 2 lakh. We are also making the payment through share premium, which will be written separately. It can't be written together because share capital is always written with face value everywhere, and the remaining amount is supposed to be paid by the bank, which is 1 lakh. So these are the two entries which we are going to pass in the books of X Limited for the purchase consideration. We can also prepare the balance sheet of X Limited by just debiting all these assets, writing all these assets in the non-current asset section, inventory and trade receivable in the current asset section, goodwill again in the intangible non-current asset section, then capital in the equity and liability section. I will write share capital, share premium, and the bank 1 lakh will be subtracted from the bank account of the new company if given in the question. So this is how we are done with this particular part of the question. Now let's move on to the other part which requires us to prepare the realization account. That is also simple. You must be thinking कि सर वो करंट अकाउंट के बारे में आपने नहीं बताया, जान के नहीं बताया बेटा, because that is the difficult part of the question. So I'm going to touch it. I will solve it. I will do it at the end so that all other parts are completely understood by you, and then we can move on to that particular part. So when you prepare realization account, that part is from the point of view of the selling business, from the partnership point of view business, from the Alice and Bob point of view. So we have to transfer all assets and liabilities to realization account at its carrying amount, at its book value. So let's do it. I have to debit premises 1,24,000 because realization account is going to be credit and all these assets is going to be debit. Premises 1,38,000. If I'm not wrong, let me see. 124,000, sorry. Then comes, that is equipment 38,000, vehicle 23,000. So let me write equipment 38,000. Then vehicle 23,000. Vehicle 23,000. Then there comes inventory. And there comes the trade receivable. So let's see what is the amount of inventory. At book value 32,000 and trade receivable 73,000. So let me write here 32,000 and 73,000. Don't forget that we are preparing the realization account. So we have to transfer all assets at its book value. So there are some more assets which Alice has been taken over, which the asset has been taken over by Alice. So I'm going to record that particular asset also. That has to be a part of the question. So let me do that. Okay. So Alice took over the second vehicle carrying amount 25,000. Beta, you have to transfer that particular part also. Like here, the other vehicle, which is 25,000. And that is going to be taken over by Alice for 23,800. The entry is going to be, yes, we know that Alice capital account debit and realization account credit for the asset has been taken over at a price of 23,800. Let's transfer the trade payables also to the realization account with an amount of 44,000. So from where it has come, let me check it out. If you see, the trade payables of 44,000 is supposed to be transferred to the realization account. So I've done that. Then cash at bank is 27,000. It will not be transferred. Sundry assets other than cash will be transferred to realization account. ये transfer नहीं होगा. ठीक है जी. अब हमने payments करनी है. It is clearly stated that we are making the payment. We are not making the payment of any asset by ourselves. Partnership business. Alice and Bob are not going to make any payment for assets. They are not going to get any payment for assets because they are not selling any asset. All the assets has been taken over either, or one of the assets has been taken over by Alice. But they are making the payment to trade payables 44,000. That is 5% with 5% trade discount. So let me calculate that. 44,000 into 0.95. That is 41,800. So I will pass the entry realization account debit and bank credit with trade payable 41,800. Okay. Now I have to pass the entry for the purchase consideration. The entry for the purchase consideration I need to pass also because that is important. So the purchase consideration is, we have already calculated, we have already gone for the working of that amount of purchase consideration, that is 4,20,000. So I will pass the entry in that particular part. The entry is going to be X limited debit with the purchase consideration 4,20,000, because he's our trade receiver. We are supposed to get that amount from that, and we got it actually through the, yes, through shares and bank. So 4,20,000 relation account is going to be credited, and because of X limited, so we are done with the account of the realization account. So let's go for the total. Which side is heavier? I will write the total of the heavier side on both sides. I will take the difference of the two sides. That will be the realization profit, which is supposed to be transferred or loss to the partners' capital account according to their profit loss sharing ratio, which is basically 3:2, 3/5, and 2/5. So please calculate. I'm waiting for you to calculate that which side is heavier, and then I'm going to prepare the capital accounts of the partner. But first we need to write the total of these. So I'll start the capital account with brought down, but which side is heavier? I believe that the debit side is heavier. So can you please tell me the total of the debit side? I expect that the debit side is heavier, but you need to help me out. Yes, any question you can ask me. And please tell me the total. जी बेटा, तो इसको हम सॉल्व कर लेते हैं. 4,20,000 प्लस 44,000 आपने तो किया नहीं, और प्लस 23,800. So the total is 487,800. I will write total here also. 487,800. If you can subtract the total now. I think somebody has solved it for me. Okay, that's great. Now the profit is supposed to be transferred or distributed between the Alice and Bob in their ratio, profit sharing ratio, which is 3/5 and 2/5. So first of all, let's calculate the profit, and then we are supposed to go for it. क्या आएगा जी? 131,000 is the profit on realization. So let me write here 131,000 profit, and 3/5 of 131,000 I'm going to write for Alice. Let me calculate it. 131,000 into 3 divided by 5, that is 78,600, into 2 divided by 5, that is 52,400. Sorry, 52,400. So we are done with the realization account. Now I'm going to prepare the capital accounts. For capital accounts, I have to go for the brought down. And if you see that the brought down given in the question, it is given, that is 2,50,000, and it is clearly stated that 2,50,000 is the capital contributed on the basis of profit sharing ratio. That is quite simple. So 2,50,000 into 3/5 is the brought down of Alice, which becomes 1,50,000, and for that particular, that is going to be for Bob, that is going to be 1 lakh. Relation profit, I will write it on the right side of both the capital accounts, 786,000, 524,000. The capital account which has been, the motor vehicle which has been taken over by Alice, I will write the amount of the motor vehicle is 23,800, because partners Alice capital account is going to be debited, because we don't need to pay him now, because he has taken the motor vehicle for the same reason. तो वो उसका जो है वो क्या हो जाएगा, क्रेडिट हो जाएगा. अब जो करंट अकाउंट्स हैं, they are supposed to be transferred into their capital accounts, because we are closing the business, we are supposed to transfer the current accounts to their capital accounts. Then comes the ordinary shares, which will be distributed between both of them in their profit loss sharing ratio, equally, and it is also given in the purchase consideration 1,60,000 and 1,60,000, and the remaining amount is supposed to be automatically adjusted through bank. Let me make you see. Remember this, that the distribution of ordinary share is 1,60,000 and 1,60,000, with which I have debited their accounts, capital accounts 1,60,000, but bank, we don't need to distribute bank account. Why, sir? Because that is going to be the balancing figure. This 1 lakh of the bank will be adjusted automatically when you will close the bank account and you will balance the bank account, right? So you don't need to balance it. It will be done automatically. In every question, bank account will not be distributed between the partners. It will be distributed automatically when you complete your capital accounts. Now, what is the problem in the question? But first tell me till here, if you find any problem, please ask me. Now, the main point of this question is the current accounts, because current account balances are not given. So we need to find it out, which is not that difficult at all. Let's go for the book values of all the assets and liabilities. Find the net assets first, according to the book value, because it just would see that we are preparing a balance sheet. So for a balance sheet, if you just see, so 1,24,000 is going to be the premises. Equipment is going to be 38,000 with the carrying amount. One vehicle is 23,000. Other vehicle is 25,000. Then comes inventory, which is going to be 32,000. Then comes trade receivables. The actual value is 73,000, right? Then comes cash, and the cash is given in the question, that is 27,000. Sir, where it is? Let me show you. Cash is given. Here it is. Just a minute. क्या हुआ? Just a minute. मैं सारे क्वेश्चन थोड़ा सा हमारा आगे पीछे हो गया. Okay, this is, so cash is, no, this is not the question. I think maybe it is 373. I was expecting, yeah, it is in the previous part actually. I just move forward. So let me find out so that we can solve it. Yes. So I think before this, yeah, that's it. So the cash at bank on 31st December 2022 is 27,000. So I have add all them up. That is the assets. And now I will subtract the liabilities, that is 44,000. So I will find the amount of capital plus current account. So please calculate it for me. Out of that amount, 2,50,000 is the amount of capital which I can subtract. And then I can find the total balance of the current account of Alice and Bob. And it is stated in the question that Alice's current account is double than that of Bob. So I can easily calculate that current account balances. But first, please solve this so that I can find the balance. I can find the net assets or the total capital, including current account. Alice and Bob had a credit balance on their current account. The balances on Alice account was twice that of Bob. That is why it is clearly stated. So the answer is 2,98,000. So let's do that now. 2,98,000 minus total capital is 2,50,000. So we can easily get the amount of current account balance of both the Alice and Bob. That will be 48,000. Now this 48,000 should be distributed between two of them in the ratio of 2:1. So 48,000 into 2/3 is the current account of Alice, and 48,000 into 1/3 is the current account of Bob. So that will be 32,000 and 16,000. Now we are done with that. We can go for the total of the capital account over here on the credit side, and I will subtract the debit side, and I will get the answer easily. So 1,50,000 plus 78600 plus 32,000, that is 260,600. Here comes also 260,600. And now I will close it with the bank. So I will subtract minus 23,800 and minus 1,60,000. So answer is going to be 76800. So I'm going to close it with the bank. That is 76800. So why it is not 50,000? Because we have to pay him for the current account also. That is why the answer is 76800. Right? We have to adjust them accordingly. Because he has taken the motor vehicle also. Now the total of the plus 52400 Bob capital account on the credit side plus 16,000, that is 168,400. I will write here also 168,400 and minus 1,60,000. So I will close it with the bank of 8,400. So the LS Bob capital account is going to be closed with the amount of 8,400, which we have already done. That 8,400 is the amount of Bob capital account after distribution of ordinary shares, because he was having less capital as given in the question, right? So we are making the payment of 76,800 plus 8,400 to Alice and Bob for the payment, for the distribution of the payment, whatever we are going for. So this is the end of the question. If I have gone for a wrong calculation, please do let me know. I think it's quite, we are done with that. If you have any problem, Uksit, so you can ask me, Ahmed. Remember this, that we have gone for two approaches. One is from the point of view of the purchasing company, and one that is X Limited, and one we have solved the question from the point of view of the selling business, which is Alice and Bob. So this is what we have done, that is books of Alice and Bob. And in that part, other than calculation I'm talking about, the entries that we have passed from here onwards, that is the point of view of X Limited की books के हिसाब से हमने इसको solve किया, right? So this are, we are done with the particular part of the question. So I hope this type of a question will appear in the exam in this year also, October, November 25-32. This is going to be, not one of the easier question, but the data was little easy, but we have done almost all the things. We have prepared realization account, we have gone for partners capital account, right? We have distributed the ordinary share, we have gone for a calculation of purchase consideration, but though we are not paying through debentures, that's fine. Then we have gone for the transfer of current account. We have to find the current accounts actually at the start or at the time of purchase, which were not given in the question. And we distributed the balance of the current account as double of Alice and a half or 1/3 for the Bob. And then we have prepared capital accounts and we have closed the capital account through bank. And then from the purchasing company point of view, he wanted us to prepare the entries. And for that, remember this, that you have to go for the calculation of goodwill. So we have done, that is the fair value of assets taken over, less liabilities, but trade payables are not taken over. They are paid by the partnership business direct. So the goodwill is 68,000. We have passed the entry. All assets are debited. Alice and Bob is going to be credited with 4,20,000. Now we are making the payment. Liability decrease through share capital, share premium, and the remaining amount is paid through bank. So that's it. Thank you very much for your time, and see you. You can go for a practice question. Whatever you find easy, you can do that. If you want me to help you out in this regard, I don't think so. I think one of the questions I have, which is this one. This one I have done for you, May, June 22-32. Remember, same type of question. I have done it for you, May, June 22-32 last time. You can solve it at home. Then October, November 23-31, you can solve it. October, November 23-31, you can solve it. Then October, November 23, 31. That is the same. Yeah. October, November 23, 31. That is important. You can do that. This is same type of question. And May, June 22, 32. Then May, June 23, 32. And inshallah, October, November 25, 32. You will find the same type of question. Thank you very much. Allah Hafiz. Any question you can ask me.
No, sir, it's clear.
We have gone for both approaches.